Hello everyone. Welcome back to our channel, where we will explain and explore the 7 safe assets to protect your wealth from banks. Do you really trust your bank with your life savings? What if I told you that the system designed to protect your money might actually be putting it at risk? Fearful? In today's video, we're revealing 7 powerful, safe assets that can protect your wealth from inflation, bank collapses, and economic chaos. Whether you're a seasoned investor or just starting out, these strategies could save your financial future. Stay tuned, because asset number 7 is something even the banks don't want you to know about. Let's dive in. In an age of rising inflation, financial uncertainty, and increasing government intervention, trusting traditional banking systems with all your wealth has become riskier than ever. From bank collapses to frozen accounts and negative interest rates, recent history has shown that putting all your financial eggs in one institutional basket can be a dangerous move. As economic systems evolve and central banks print more money, preserving the value of your hard-earned wealth requires a more strategic, diversified approach. This article explores 7 safe assets that can help shield your wealth from the vulnerabilities of traditional banking. These assets range from tangible investments like gold and real estate to more modern options like cryptocurrencies. Each offers unique benefits and plays a vital role in building a resilient, diversified portfolio. Whether you're an investor, a saver, or simply someone concerned about financial independence, understanding these assets is essential in today's economic climate. Let's dive into the 7 safe assets that can protect your wealth from systemic risk, inflation, and the unpredictable future of banking. 2. Gold and precious metals. Gold has served as a store of value for over 5,000 years. Unlike fiat currencies, which can be devalued or inflated by central banks, gold holds intrinsic value and is universally recognized as a hedge against economic instability. 1. Historical stability. During times of crisis, from wars to financial meltdowns, gold prices have historically surged while paper currencies faltered. It's the ultimate crisis commodity that investors flock to when uncertainty looms. 2. Physical versus digital. Gold. Investors can purchase gold in various forms: physical bullion, bars and coins, exchange-traded funds, ETFs, or through digital gold platforms. Physical gold offers direct control and protection from third-party risks, but requires secure storage. Digital and ETF-based gold is easier to trade but carries custodial and systemic risk. 3. Silver, platinum, and palladium. Silver, often referred to as poor man's gold, offers similar benefits with more affordability. Platinum and palladium, used in industrial processes, add diversification within the precious metals category. 4. How to buy and store safely. Always buy from reputable dealers. Store physical metals in home safes, private vaults, or insured storage facilities. Avoid keeping large amounts in bank safety deposit boxes. They are still under the banking system's umbrella. Gold and other precious metals remain a cornerstone for wealth protection, especially in an era of currency debasement and rising debt levels. 3. Real estate. Real estate is one of the oldest and most trusted ways to protect wealth. It's tangible, income-generating, and often appreciates over time, particularly in markets with growing demand. 1. Tangible asset with utility. Unlike stocks or bank balances, real estate provides housing, rental income, and utility. In economic downturns, people still need places to live and work, giving property enduring value. 2. Types of real estate. Residential, single-family homes, multifamily units, or vacation rentals. Commercial, office buildings, warehouses, and retail properties. Raw land can be developed or held for speculative growth. 3. Real estate investment trusts, REITs. REITs allow investors to gain exposure to real estate markets without owning physical property. They pay dividends and offer liquidity but are also exposed to stock market fluctuations. 4. Inflation hedge and tax benefits. Real estate often rises with inflation. It also offers tax deductions on interest, depreciation, and maintenance. Leverage, via mortgages, can amplify gains when used responsibly. 5. Risks and considerations. Real estate isn't without challenges: market fluctuations, tenant issues, maintenance costs, and regional laws. It requires active management or reliable property managers. Overall, real estate remains a powerful tool for building and preserving wealth outside of banks. IV. Cryptocurrencies represent a revolutionary shift away from centralized banking. Assets like Bitcoin are borderless, permissionless, and deflationary by design, qualities that make them attractive in a world of increasing financial surveillance and currency debasement. 1. Bitcoin. Digital gold with a capped supply of 21 million, Bitcoin acts as a hedge against inflation and fiat currency erosion. It's decentralized and not controlled by any government or institution. 2. Ethereum and other altcoins. Ethereum introduces smart contracts, allowing for programmable finance. Other altcoins offer various innovations, but carry higher risk and volatility. 3. Stablecoins like USDC or USDT are pegged to fiat currencies and used for digital transactions. While more stable than traditional crypto, they are still backed by centralized entities and may face regulatory risks. 4. How to store crypto safely. Use cold wallets, hardware wallets like Ledger or Trezor, to keep crypto offline and protected from hacks. Avoid storing large amounts on exchanges, which can be hacked or shut down. 5. Risks and volatility. Cryptocurrencies can be highly volatile. Regulatory uncertainty, hacks, and speculative bubbles pose real risks. However, long-term holders have often been rewarded. When used wisely, crypto can be a powerful addition to a diversified, bank-free portfolio. Versus collectibles and alternative tangible assets. High-net-worth individuals have long relied on collectibles and alternative tangible assets to store and grow wealth beyond the reach of traditional finance. These unique items can appreciate over time, are not subject to banking regulations, and often serve as both passion projects and financial hedges. 1. Art and antiques. Fine art, rare paintings, sculptures, and antique furniture can hold tremendous value. The global art market is worth billions, and certain pieces appreciate significantly with time. Art offers privacy, prestige, and resistance to inflation. 2. Luxury watches and jewelry. Brands like Rolex, Patek Philippe, and Audemars Piguet are more than status symbols. They are high-performing investment assets. Limited edition pieces often surge in value over time, particularly when maintained in pristine condition. 3. Rare coins, stamps, and historical memorabilia. Numismatics and philately can yield strong returns for collectors with specialized knowledge. These niche markets are less volatile and often appreciate during times of economic instability. 4. Wine, whiskey, and classic cars. Fine wine and rare whiskey have carved out niches as alternative investments, stored in temperature-controlled cellars and auctioned globally. Classic cars, when well preserved and limited in production, can become million-dollar collectibles. 5. Authentication and marketplaces. To avoid scams, it's crucial to verify authenticity through trusted appraisers, dealers, or certification bodies. Reputable auction houses and online platforms like Sotheby's, Christie's, and Rally Road provide access to vetted markets. 6. Illiquidity and long-term perspective. Collectibles are not easily converted to cash and often require years to realize gains. They suit investors with patience, passion, and long-term vision. In the right hands, collectibles blend luxury with smart investing, and offer true independence from banks and traditional financial systems. So there you have it, 7 smart ways to protect your wealth from the banking system. If you found this video valuable, don't forget to hit like, subscribe, and turn on that notification bell so you never miss a future upload. Which asset are you investing in first? Let us know in the comments below. And remember, don't just work for your money, make your money work for you. Thanks for watching, and we'll see you in the next one.